Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to talk about Canadian Natural Resources stock. I will discuss their business, their future plans for 2022 and beyond, their dividend, the risk associated with this company, and finally I will provide a detailed stock analysis using my personal discounted cash flow model and will then provide you with a fair value of this stock depending on your investment goals. The company HQ is located at Calgary, Alberta, and their shares are traded on TSX for almost 65 Canadian dollar at the time of recording this video. They pay a dividend with a starting yield of almost 4.24%, and the market capitalization of the company is around 75 billion Canadian dollar. CNQ has a very interesting price chart. So they went through an expansion phase from 90s until 2008, when there was a huge oil price bull run. And then the share price just basically moved with the oil price and went through oil cycles of ups and downs. If you compare the share price chart of CNQ with crude oil price chart, they matches each other perfectly. In the pandemic, the stock hits the low price of around 20 Canadian dollar per share, but since rebounded dramatically and it exceeds its all-time high share price by a large margin during this recent oil bull run. The company just released its recent earnings report and the numbers were great as expected. They even want to pay a special cash dividend of $1.50 per common share to the shareholders, which is great. At the same time, the shares of the company dropped a little bit during the recent oil price correction, so the critical question is this a good time to buy CNQ or should you just wait? What I'm going to say in this video may not be something that you are looking to hear, and I'm sorry about that, but it is something that you need to hear if you want to invest your money into CNQ. Before starting the video, I want to emphasize that I'm not a financial advisor. This video is not a financial advice for you to buy, hold, or sell this stock. This is just my personal opinion. You should always do your own research before making any financial decision. With that being said, let's start this video. CNQ acquires, explores for, develops, produces, markets, and sells crude oil, natural gas, and natural gas liquids. The company offers synthetic crude oil, light and medium crude oil, thermal oil, and primarily heavy crude oil with a balanced and good mix of these products. It operates primarily in Western Canada, United Kingdom portion of the North Sea, and offshore Africa. I should mention that CNQ midstream and refining assets includes 2 crude oil pipeline systems as well. CNQ management emphasized a lot on the fact that their business and balance sheet will remain strong even during the down cycle of the oil, and they strategize resources to remain profitable during all cycles by ramping up production during bull runs of oil and then reduce their spending on low capital exposure assets in the bear cycles of oil. They base their business on these 4 pillars, which are balance sheet strength, return value to shareholders via dividend and buybacks, resource value growth, and opportunistic acquisitions. They have a large reserve of oil and gas products with a life index of 30 years, which is a great asset for the company and investors. And overall, it seems the business itself is doing pretty well. While CNQ management emphasizes a lot on managing the oil price volatility and strategies for various cycles of oil, unfortunately the numbers in their financial statements say otherwise. CNQ cash from operation and also earnings and revenue still fluctuate significantly year over year and even quarter over quarter depending on the oil price. CNQ of course will be in an extraordinarily good financial situation if oil price remain at these levels. They usually use $96 as a reference point for their future discussions, which means even if oil remains at around $90 levels, CNQ will be a cash-generating machine which can reduce its long-term debt, buy back shares, issue more dividends, and grow its business. They plan to continue to increase their production at a relatively fast speed at this point, and at the same time continue to increase the capital return to their shareholders. They aim to use 50% of their free cash flow to buy back shares in 2022 and pay special cash dividends if possible. CNQ has a long history, to be accurate 22 years of paying out and increasing its dividend year over year. They almost tripled their dividend in the last 7 years and at the same time bought back the shares of the company, which is definitely one of the most consistent records and one of the fastest dividend growth rates and value return to shareholders among oil and gas companies in Canada and even in the world. Only in 2021, they increased their dividend twice by 38%, which is absolutely a huge increase. They currently have a low payout ratio, which means they will probably be able to continue to increase this dividend year over year as long as oil price remain relatively the same, which is of course the main challenge of the CNQ management. Canadian Natural Resources is in a cyclical sector. As its profitability, it strongly depends on the oil price, but the management tries to find ways to stabilize the balance sheet of the company as much as possible. They reduced their debt significantly during this bull run of oil and made their financials much more reliable and healthy. As I mentioned in the previous parts of the video, unfortunately, they cannot control oil price, and history and numbers show that their cash flow and revenue depend significantly on this external factor, which is oil price. They may be able to grow the cash flow by 40% in 2022, by 50% in 2023, but they may also experience a 60% drop in their free cash flow in 2024 if oil price is going to drop. As such, while I think CNQ has a great management team which focuses on returning value to the shareholders, the cyclical nature of their business makes it inherently a risky investment. Especially if you want to invest during the bull run of oil, the risk would be much higher than potential reward. Is it possible that this company continues to do great? Yes, absolutely. However, personally, I would only consider buying CNQ if we are in an oil bear market like March 2020, when the valuations of the company is in historical lows and the stock price screams a buy. This is my favorite part of the video where I can show you my stock analysis based on the financial data I discussed in the previous parts of the video. I use a discounted cash flow model which basically estimates the values of stocks based on projections for the future cash flow. So I make some assumptions about the growth of the company in the next 10 years and then discount the future cash flow into the present value of the stock based on my expected rate of return. So I start with the past 4-quarter free cash flow of the company, and based on 3 different scenarios, I predict the future cash flow of the company in the next 10 years. Because CNQ is cyclical, I am going to be conservative with the assumptions here, as I have to take negative growth years into account as well. In the bear case, or the most negative case for the stock, the company can grow their free cash flow by 6% in the short term, and then the growth will slow down due to oil bear markets to 2% in the long term. Again, I try to be conservative with CNQ as their cash flow will be cyclical. I consider terminal multiple of cash flow of 3 for this case, which is consistent with their historical bear periods of oil stocks. For normal case, I consider a little bit better growth and a terminal multiple of 6, which is the historical average multiple for this company. For the bull case, or the best possible outcome, I consider the business can grow by 10% in the short and mid term, and then it drops to 8% in the long term. And I consider terminal multiple of 9, which is a bull multiple for this company. Now, I assign a 50% chance to a normal case, a 25% chance to the bull case, and 25% chance to the bear case. For growth stocks, I usually expect 10-15% return, and for dividend stable stocks, I expect 10% return. If I expect a 10% return from this company, the fair value of the stock is almost 35 Canadian dollar, which means compared to the current share price of almost $65, the shares are traded at 41% premium, which means it's basically not a buy according to the model. Personally, I only invest in CNQ with a huge margin of safety, and therefore I expect a 15% return year over year from such company. If I change the expected rate of return to 15%, the fair value of the stock is actually around 24 Canadian dollar, and I will buy the stock at this price. You will probably say I am crazy to think CNQ will hit $24 as it is at $65 today, but it hits these levels, $20 in March 2020, almost 2 years ago, and it would go to those levels again if the oil price drops significantly. If it doesn't go to those levels, okay, I'm fine. I will focus on other companies which are undervalued today. It's always fun to see what analyst predictions are for a company, and according to Yahoo Finance, the analyst price target for this company is currently at $90 per share for 2022 with a buy rating. So it seems my cash flow analysis is the opposite of what professional analysts are saying here. However, you should know that analysts usually only look at the short-term price actions to come up with their predictions. And in 1 year, yeah, it's possible that CNQ price would be in this range. However, in the long run, and for the most part, the analyst predictions are not accurate at all. In summary, while CNQ has a great management team which focuses on returning value to the shareholders via dividends and buybacks, and they try to reduce their debt as much as possible, their financials, especially their cash flow, strongly depend on the oil price, which is cyclical in nature. It means CNQ will go through periods of huge success and explosive free cash flow growth like 2021 and 2022, and if it eventually goes through periods of losing money and huge decline in its free cash flow like 2020. Even if you say this time is different, I would say no, it is not different. I would personally not going to buy CNQ at these levels, but would be interested in buying the stock if oil price drops significantly. Sorry to disappoint a lot of you with my last statement about huge drop in the oil price, but it is the reality. And oil, like all other commodities, cannot remain at these levels for a long time. I hope you enjoyed the video, and if you enjoyed the video, consider subscribing to the channel to see similar videos. Thank you for watching, and I see you in the next video. Farewell.